I mean, look at employee expenses shooting up the way they have, and the other income for them down 30% from northwards of 700 crores to 494 crores. No surprise that the PAT number is looking the way it has and wobbled. So clearly a stock that could be amongst the top losers today. I don't have too many stocks really, just a couple up on the results at least. Pitti Engineering, much like Berger, wherein higher OI, lower tax outgo propped the PAT growth. But the revenue numbers, I mean, revenue numbers were okay, 32% actually, at 328 crores versus 248 crores. So the revenue number looked okay, but the margins corrected a bit, 14.8 versus 16.4, so not that great. PAT was up above, of course, 62%, like we said, because of higher other income, lower tax outgo, both of which propped the PAT growth. So decent PAT performance, decent revenue performance. Margins took a bit of a hit, not a very liquid stock, but keep this in mind. From amongst newsmakers, PSP projects could be in focus, settled the dispute with Surat Diamond Bourse, and the Surat Diamond Bourse has agreed to pay 170 crore rupees in tranches, so do watch out for that one as well. And you know, last but not the least, just wanted to bring out amongst other things, and standard disclaimer, of course, that talking about an Adani Group stock, and the Adani Group owns NDTV, and you're watching NDTV Profit, but the Morgan Stanley note on Adani Ports is very interesting, wherein they've spoken about how, amongst everything else, they are pretty enthused by how the company has done much better than what their own estimates were with regards to what they've executed and the guidance. So on that front, it looks pretty strong, really. I mean, just the note, they say the 5-year plan is ahead of our estimates. The FY29 expected targeted growth across both the ports and logistics business is ahead. The guidance that Adani Ports seems to have given is that the cargo volume is targeted to reach 1,000 metric tons by FY29, 2 export revenue and EBITDA growth, ROC of all major ports targeted to be above 20%, and 7x logistics revenue and EBITDA growth. So all of this makes Morgan Stanley say that the 5-year plan is ahead. They remain overweight. Their target price is 1517, which is a modest 14% upside. But just the fact that the targets given by the company are so strong, let's see if that stock continues to be in focus, because remember, both the Adani twins on the index at least have been up and running for the last 2 or 3 sessions.